AMC stock is up about 2% at the time of recording this video. We were just previously as high as 5% positive. We did hit a low of $14.73 per share and then ran all the way up to $16.11 per share, and we have since started to come down in a very dramatic way. Now, what is exactly happening here? Let's just be obvious and let's point it out for everybody that does not realize. Look at something like Redbox, down almost 17% today. Look at a lot of these other stocks that have been rallying as of recently when AMC stock has been falling. Well, what has been happening? What has been fueling those rallies? Where's the buying power coming from? It's coming from retail investors that are buying into different stocks to follow the momentum. Nothing wrong with that strategy in my personal opinion, but you're seeing people heading back into AMC stock here today. We did come down, like I said, tested that $15 support, found a lot of demand, and then started to catch a bid and started to rally. And then everybody's talking about what again? AMC stock. And that's how the markets are moving as of right now, especially within the retail FOMO community. We will just call it that for a lack of a better word. There is no specific news that is causing this rally today. There's no specific option activity that really suggests institutional investors are behind this move. Like you can see today, 17 orders totaling $1.99 million, positive order value of 38%. Now, I will point out yesterday, you've seen a lot of unusually bullish option activity from institutional investors. 4 orders totaling $537.23 thousand, positive order value of 87%. So yesterday you've seen positive or bullish option activity on AMC stock, but today you are not seeing that whatsoever. So to bottom line that, it's literally the FOMO crowd moving from AB stock back to AMC. That's literally all it is. Now, is this going to cause the next rally? I'm not exactly sure. Now, it will all come down to the Fed. And I'm sure you guys have noticed how crazy the markets are. And I'm sure a lot of you guys are pissed off. If you buy puts, 2 minutes later, they could be absolutely destroyed. If you buy calls, 2 minutes later, they could be absolutely destroyed. These candles are like 1 point candles. This is a 94-cent red candle. Stock market dropped 0.22%. Off of this candle, the next candle 0.13%, 0.06%, and then 0.12%. Found a bottom down here and then went straight back up. You're seeing a lot of volatile moves, and it is really making it hard to trade this market, whether you have been trading for a long time or whether you are brand new to the markets. This is the most challenging market that you will probably see for at least the next 10 years. From a trading perspective and from a long-term investing perspective. Even if you have a solid trade, things are looking good, or a solid company, it can all be dragged down by the markets. The correlation between the stocks that are moving the markets, like your Apples, Amazon, Nvidia, Tesla, Google's, if those do bad, the whole markets do bad. If those do good, the whole markets do good, right? So there's a high correlation, and it's coming down to a couple key stocks. If they do well, markets do well. If they don't, markets do not do well. So you're seeing a lot of very, very volatile moves here. Yesterday, I think is the key to all of that. It came down to $405.02 on the S&P, and then closed at about $415. Just in the last 45 minutes of the day yesterday, you've seen a massive reversal. So I think this gives us some level of key or guidance to go off of as far as how low the markets could potentially drop if the Fed is negative and the markets do take it negatively. Now, that's really what I wanted to talk about here in this video, is what to expect tomorrow, because the Fed report comes out at 2 p.m. and then you get Fed Jerome Powell that comes out and speaks and basically says, hey, we're going to do this. This is how the economy looks, stuff like that. This is probably not your first FOMC meeting. This is probably not your first interest rate increase. If you were in the markets back during this time, March 14th, March 15th, this was the last FOMC meeting, and the markets absolutely ripped off of that because it was right as we expected. Now, what the markets are expecting right now is a 0.5% rate hike. Firmly expecting that 100% chance the next 4 meetings to get a 0.5% rate hike. So if the Fed comes out and does a 0.5% rate hike, things will be fine they will be fine. If the Fed comes out and only does a 0.25% rate hike, well, that could actually spook the markets because the Fed has all of the economic data that you could ever hope to have if you were a trader looking to make trades. So if the Fed is not in line with what the markets are expecting, or if they are overly dovish, then that could be a signal that growth is slowing down in a substantial way and that we do have other problems to contend with that are going to be even bigger deals, right? Fundamentally for these different companies. So as long as the Fed comes out 0.5% rate hike, we're going to be fine. Now the balance sheet reduction, that's the curveball here. That's what the markets don't know how to react to. Why do I say that? Well, if you look at the Federal Reserve's balance sheet from, 2008 until now, the balance sheet has increased about 10x in size, going from about $900 billion of assets all the way to $9 trillion of assets. We've never reduced the balance sheet ever in a substantial way besides 2018 and 2019. If you come look at the S&P 500 during 2018-2019, it was not very pretty. A lot of people are talking about this is kind of what the markets look like right now, right? You can make the statement that we are either here or we are either here. So, markets hit the high, they came down, right? It went back up a little bit, came down lower, and then started, hopefully to rally again. Or you can make the argument we are right here, just ping-ponging back and forth, the typical W shape, and then we completely flush out and crash. The markets fell about 30% in late 2018, early 2019, and this is the only time the balance sheet has ever been reduced. So markets don't really know how to expect balance sheet reduction one is going to go, but how the markets are going to react. We don't have anything that is bullish to look at. You can't sit here and say, well, the Fed has increased rates, 20 times in history. The stock market has went into a recession, or the economy has went into a recession 12 out of the last 20 times. Yes, it's possible to get a recession, and it's likely to get a recession, but we don't have to, right? I hope you guys are catching my drift here. We've only reduced the balance sheet once. So that's going to be the key, what Fed Jerome Powell says about the balance sheet. If he comes out and he says they're going to reduce it by more than $1 trillion per year, which we pretty much expect about $1 trillion balance sheet reduction per year, then things are going to get pretty bad in the stock market pretty quickly. Let's just call it that. So that's going to be the main key. And I don't really think the markets are going to move too much tomorrow, but the markets will move a lot based off of the Fed. They're either going to rally in a very strong way, like we seen last time, March 14th to March 15th, or we are going to continue to sell off back down to that 405 level, if not the 400 level flat. I think you'll find a lot of support in here, but if we do fall under 400, it's like no man's land. There's not really any levels of support to really go off of. One could make the case that 380 could be decent support, or 390 just on a psychological basis, but there's nothing really to point out here at any of these levels. You're, like I said, in no man's land. So it all comes down to the balance sheet reduction. If the Fed does come out and raise by 0.75%, which is only like a 30% chance of them actually doing that, that could also be a very negative thing. But I don't think the Fed is going to do that, even though they probably should. I don't think they're going to. I don't think the markets will react too much to that. But the balance sheet, that is going to be the main key. So that's really what you guys need to know. If I were to throw a prediction out there, I do think the first initial reaction off the Fed meeting is going to be bullish, maybe for half a day, maybe for a day or two, maybe we rally into the close on Friday. And then I think next week, that's where you could really see some people start to think about the balance sheet reduction, start to think about the Fed raising rates. Like, hey, this, it's good because they're not going too hard, right? They're not raising rates too much. But at the same time, people might start to come to reality and realize that, hey, this is not going to be good for the businesses that we invest in. So those are only my thoughts. Obviously, we could fall through the floor or we could rally, but that's really what to watch out for. Now, as far as earnings for today, you do have AMD in after hours, you have Airbnb in after hours, and you have Starbucks in after hours, as well as you do have Lyft as well. So these are going to be the main players here today. These are all, I believe they're all close to over $100 billion market caps. I don't believe Lyft is, but I think it's decently sized. So these are going to be some pretty big companies here in after hours. Tomorrow, In after hours, you have Twilio, Etsy, Uber, Marathon Oil, Skills. If anybody's in that one, that's going to be a key for you to watch. Now, Thursday is what I'm excited for. You have Block, a company I own, Fubo, a company I own, Lucid, a company I own, and then you have Cloudflare, Opendoor, Wish, DoorDash, Virgin Galactic, and Vertex. So that's going to be a key one. And then DraftKings on Friday, Under Armour, Goodyear, a couple other segments of the economy that do report on Friday. So all in all, another pretty big week for earnings, but I don't think there's going to be like one stock that controls the way the markets are going to move, like Apple or Amazon control the market. So it all comes down to the Fed. Leave your thoughts, comments, questions, or concerns. What do you guys think the Fed is going to do? How do you think the markets are going to react? And even right now, we are more bearish on a put to call ratio than what we seen during March of 2020. So in other words, 100-year pandemic hits and people were more dovish then. They were more, excited about the economy. They thought things were going to be much better than they turned out to be comparatively to now. You have more bearish people now. I think when the sentiment, people get mad at sentiment is so low, it doesn't take a whole lot to make the markets actually rip in a very substantial way. Some economists are calling for a 7 to 10% rally after the Fed due to the simple fact of fear catalyst comes, fear catalyst goes, fear catalyst is gone, right? So the uncertainty comes and goes. The markets could rally based solely off of that one. So I don't know what to make out of it. I do think you will see a slight bullish tint, especially if we do drop tomorrow into the Fed meeting. But then again, next week as well, you're going to get a lot of digestion from the Fed, and people are going to, be trying to figure out what this will mean for valuations of companies, where to put a fair multiple on these companies. And then just 1 month later in June, you have the next Fed meeting. So the Fed might say, which this could be very bullish as well, which I don't know if it's going to happen, but the Fed might raise by 0.5%, and then they might say, we're not going to put anything else in stone. We're not going to commit to raising rates anymore right now. We're going to see how the next data point comes out, the next CPI data that comes out here in the next couple of weeks. So those are my thoughts. Hit the like button, subscribe to the channel. Let me know what you guys are doing with your portfolios. If you guys want to come trade with me live in real time, link down below in the pinned comment. I send out all of my trades. Not financial advice, not a guarantee to make money or lose money. Know what you're getting into when you join. Know how options work. You can make a lot. You could lose a lot. You could lose everything, or you could 10x your portfolio. There's really no other way to put it when it comes to options. So that's all. Thank you guys for watching. I will see you in the next one.